Well, it was a big buy-the-dip session in New York last night. The S&P 500 had fallen 4% in the second half of November because of Omicron. It hit the lower bound of this year's trading range and bounced like Tiger last night, so this year's trend remains intact. Now, that trend line, by the way, represents an annual growth rate of 25% versus the long-term average annual return of 10%. So can't be too much left in it, you'd think. Anyway, last night's gain was 2% and the tech stocks on Nasdaq went up 3%. Now, part of the reason for the optimism is that while Omicron is still unfolding, it's clear that world governments are more relaxed about COVID at the moment, or more worried about locking down their citizens. This chart shows global cases and the average stringency indexes around the world, and the difference between now and 18 months ago is rather striking. The local market rose 1.3%. Magellan Financial Group jumped 4% in relief after the chairman and co-founder Hamish Douglass confirmed the rumours that he and his wife had split up, but they weren't selling shares. Buy now, pay later business Zipco found some bidders, having fallen 70% from this year's peak. Banks and retailers also performed well, as did the miners, after a huge 10% rise in the iron ore price last night. Oil and precious metals also went up, and the Australian dollar continued its escape from 70 US cents. And finally, the Bureau of Statistics delivered its annual adding up of births today. The number of births in 2020 fell 3.7%, and the fertility rate was a record low of 1.58 babies per woman. In 1961, when my mum had her fourth, the average was 3.6 per woman. And that's finance. Thanks for watching. You can check out more finance news by clicking there, and don't forget to click subscribe down there to get all the latest updates from ABC News.